break in our Expert Speaks segment, I am joined by Madhulika Bhaskar, retired General Manager and Director of GIC Re and present Deputy Secretary General of General Insurance Council, former acting CMD of New India Assurance also, and she brings over 35 years of experience with India's national reinsurer along with few months of direct company leadership exposure at New India Assurance. Madhulika ma'am, welcome to Insurance Mantra.
Thank you for being.
Ma'am, just want to understand from you, for our viewers, how reinsurance industry is evolving in present times, because you have seen in last 35-40 years how things have changed for reinsurance business in India and globally also.
More and more as years are passing, the awareness is setting in. Earlier we used to say insurance is just sold, not bought. With awareness, it was not being purchased. However, because of the high valued risk involved in infrastructure, your COVID, health costs going up, and things being made mandatory, awareness is being set in, and lot of more individuals and entities have started buying insurance. Even complex needs are coming in, like surety bonds, cyber risk. Every day there is a demand for something new and different, for which the market has to be prepared. Okay,
so going ahead also, do you think that for a country like India, the developing economy, we are growing at the Q2 GDP data 8.2%, and for next 5 years, for next 10 years, there will be importance of reinsurance will be there?
It is, banking and insurance are two sectors which will never die. The need will be there. It not only be there, it is going to be increasing, because the insured values are continuously going up, either because of inflation, innovation, new projects being taken up. As the sum insureds go up, the value at risk goes up. The need for insurance for every businessman, every individual, and at the same time, the need for reinsurance for every insurance company is bound to go up. It will never die.
Okay, so going ahead, we'll see the more reinsurance companies.
Yes.
Okay, so how big is the Indian reinsurance market? How many companies are there? And as you said that going ahead, there will be more companies also.
Correct. If you talk about how many companies are registered and operating from the Indian soil, there are currently 2 reinsurance companies, big ones GIC Re and Valuatics, a new setup. There are about 12 FRBs who are registered with the IRDA. There are a few more who are registering with the GIFT City and will be operating from there. But remember one thing, reinsurance is a global phenomena. Even if these companies are not registered in India, that does not mean they are not supporting the Indian market. Reinsurance is something like every company wants insurance support, can buy it from anywhere. It will buy it from the Indian market. If it is not satisfied, not fully covered, it moves out. So we have got CBRs, cross-borders reinsurance, also supporting the Indian market. So location of the insurance company is not the primary reason. The risk can move globally, and that is an intrinsic part of any reinsurance business.
Okay, and we often read and we often come across about the pooling mechanism. So what actually is the pooling mechanism, and GIC's role in the pooling mechanism?
See, as I said, intrinsic way of handling any big risk or any risk which has got a high intensity or high frequency needs to be supported by all. So pooling is one method where all the capacity of the market is brought together under one umbrella. Like individually, one company has to support, it can support in a very small way. But when you pool the capacity of the entire market, the support that you can give to that whoever wants the support insurance cover is very large. So like terrorism was one area. When the world market walked out of supporting the Indian terrorism risk, GIC stood up and created a pool. So GIC was the manager who manages the capacity, but actually the risk is shared by the entire market. All the registered insurance companies were picking that risk in small and big fashion. So pooling is a mechanism where the entire capacity is brought together, and you need an administrator or a manager who does all this admin work of bringing bringing the capacity together. That role was played by GIC Re.
Okay, and do you think that the GIC is getting impacted now? Previously, there were only one domestic reinsurer. Now there is one, the ValueAtix is there, the other one, the Allianz Geo, they are also will be starting operations. So how the more number of companies will have an impact in Indian domestic reinsurance market?
See, GIC has the advantage or a leverage of being in this market for so many decades. You have already created a relationship, and insurance and reinsurance depends heavily on relationships. It depends on the continuity of support, mutualism, so many other factors. This competition, GIC already had competition from various reinsurers, whether it was form of FRBs or CBRs. So competition is not new to GIC. It was facing competition before. It is a question when these, only question will come is like your obligatory. The objective behind that is retaining the premium in India. There might be a change of regulations which says that it has to be shared with the other reinsurers.
And please explain this. I was about to ask this question about the obligatory session. So what is that obligatory, and how in this obligatory session GIC is favored?
Okay, obligatory is like your government had made it mandatory that every insurance company in India has to give a certain percentage of the risk to GIC Re as being the Indian reinsurer. The objective is to see that the premium is retained within the India, and also to strengthen GIC in some fashion, as though it is not called the national reinsurer, but it did play to some extent the role of a national player as and when there are crises. The company which rose to cater to that crisis and was GIC Re. But going forward, as more companies are setting up shop in India, the government might change its strategy and say you have to retain the risk in India to the extent possible. That is, first right of refusal was go to GIC. If not, then go out. The change might be that go to either of these Indian reinsurance registered companies, then go out. It is necessary to ensure that your forex is not drained and taken outside. So it is a feature many companies, many countries have it. You need to first exhaust your Indian capacity before going out. And if you talk about GIC getting the right of first refusal or obligatory cession, it was because it had its monopoly at that time. It can go
obligatory
gradually.
Is still there.
Monopoly, now you've got ValueAtix who will come in. Tomorrow the regulations might change. So the idea is government needs to have its own company, someone whom you can depend on when there are crises. It's up to them how they create that kind of a capacity. You need to favor someone to give some kind of a strong base so that they stand up during crisis. It's necessary to balance it.
Balance it.
Yes.
Ma'am, now I'll move on to our rapid fire questions. So I have 10 questions for you, and you have to answer these questions in a rapid fire way. So my first question, one word to describe India's reinsurance market today.
It's extremely dynamic.
Biggest challenge for general insurers right now, pricing, distribution or claims?
It's pricing.
In India, is India ready for large-scale cyber insurance?
Yes, we are on its way, but yet to reach there.
One reform that can strengthen India's NatCat resilience.
If the regulator makes purchase of NatCat risk peril compulsory with all property risks.
Will motor insurance will remain the largest growth driver for general insurance industry?
Yes, till insurance awareness sets in.
One product category in general insurance that needs immediate innovation.
I would say cyber.
What worries you more, climate-driven losses or underpricing by insurers?
Both are correlated, so I would say underpricing. A good pricing would automatically take care of claims.
One global general insurance trend India will adopt sooner than expected.
You have to have AI doing your underwriting, claims, servicing, everything. Adopt AI.
One piece of advice you always give young underwriters entering the industry.
Ask as many questions and seek as much of clarification as you want while underwriting, so that no questions are asked at the time of claims. Okay, ma'am. Now your final words. What will be your insurance mantra to our viewers? I would say it's something that you can't avoid. Like, as you are comfortable with banking, try and become comfortable with insurance, because it is equally important financial aid for your growth for your stability, financial stability.
Okay, so give the equal importance to insurance and also
give it
like
to banking.
Thank you so much, Madhulika ma'am, for sharing your insight, valuable insight for our Insurance Mantra show. Thank you so much.
Thank you so much.
So that's a wrap on this edition of our Insurance Mantra, but we will leave you with Did You Know Insurance Basic. In India, the regulator gives domestic reinsurers, mainly GIC, a priority right called the right of first refusal or ROFR. What does this mean? Before an Indian insurance company can give its reinsurance business to any foreign reinsurer, it must first offer the same term to GIC and other eligible Indian reinsurer. If GIC accepts the term, the business stays in India. If GIC declines, the insurer is free to go to a global reinsurer. And why does ROFR exist? So these are the reasons: to strengthen Indian domestic reinsurance capacity, to keep premium outflow within the country, and to ensure local reinsurers get fair access to Indian risk. So that's our insurance mantra. Stay informed, stay protected. This is our insurance mantra.